Overall print was solid. You had a top line beat, and search actually did better than expected. The only reason I can think of for the stock being down is they sort of missed on the operating income line. And the reason they missed that is you see that $3.4 billion charge where basically they attributed it's a footnote, so they attributed it to hedging and layoffs and severance packages that were so it's a one-time charge, but that is what drove the operating income below the consensus number. And other than that, Capex increase, it was expected. I don't think the stock would have been down on that, but to me, that is the only thing that's sort of negative in the print.
So I want to get this straight. The company brought in $96.43 billion in a single quarter.
It's always big numbers.
And it's going to spend $85 billion in this 1 year on Capex.
Yeah. Well,
almost the entire quarter's revenue on Capex for the year.
And it's a raise. So the earlier guide was around $75 billion. So it is a $10 billion increase in Capex expectations for the second half. So
what are they spending on? Just remind us. Is it all AI?
Infrastructure. Yeah. I mean, you need the data centers, you need the power, you need the chips, everything. And the fact that cloud did better than expected, I mean, the consensus was 28%, they posted 32%. That tells you that the sequential acceleration points to robust cloud demand, and they are probably supply constrained. That's the reason why they are raising that Capex. And so if they had more chips and more AI infrastructure to offer, they would have posted a higher revenue on that cloud line.
Hang on for a second, Mandeep. We got to do Tesla.
Yeah, second quarter revenue coming in just below estimates at $22.5 billion. Estimates are for $22.64 billion. Second quarter adjusted earnings per share coming in just shy of estimates by 2 cents at 40 cents. Second quarter gross margin coming in at 17.2%. That is above estimates of 16.5%. Stock bouncing around a little in the after hours trade, but Carol, up about 0.3%.
I think what's interesting too, and I think we got this from, I think it was our own Steve Mann, but this whole idea of plans for new vehicle launch in 2025 remain on track. And he said, in terms of hitting that number, I think it was more than 1 million vehicles for the year, that in order for them to do it, they've got to have new vehicles, and in particular, a less expensive model. So we'll look for some more clarity behind what those new vehicles are for the year. So yeah, bouncing around right now, up about 0.2%. We'll have more analysis on Tesla in just a moment. Want to go back to Alphabet. So what's top of mind, in terms of the call? I mentioned, you talked with us about the total subscription across all of their platforms, the 270 million folks. That's important. The token customization. Have we really gotten anything on that yet?
Actually, they didn't mention it in the press release. So to my mind, the fact that it was there in the last one and not there this time around tells you maybe AI overview growth. So for last quarter, it was 1.5 billion MAUs.
Right.
This quarter, they said it did well, AI overviews and AI mode, but they didn't have a number for us to compare against. So that could be another reason.
So they'll be asked on the call.
I am certain they will be asked on that.
What's the connection between Gemini and AI overview?
So Gemini is a model that powers AI overviews, but Gemini is also a standalone app that has 400 million monthly active users.
But if I use the Gemini app the same way I'd use ChatGPT or Claude from Anthropic, would I get the same answer by asking it a question that I would get by typing into Google and getting that AI overview?
Not necessarily. I mean, again, it goes back to, token customization and how they would spit out an answer. So AI overview is a condensed form of the answer that you would get on Gemini. And that's where, AI overview is more tailored to the traditional search page, and it's got limited real estate. But clearly, the cost of doing AI overviews is much higher than a traditional search query. So a traditional search query used to cost 2 cents. An AI LLM search query is almost 10 times more, 20 cents. So that's where the gross margin impact will show up. And the fact that they missed on operating income, I don't think it is because of that this time around, but that is also a consideration given, LLM search will be a growing part of their search query mix going forward.
Do you think they need to justify? I want to go back to capital expenditures. I think, the stock's bouncing around here in the aftermarket, so it's hard to get kind of any clear direction. But do you think they need to, is there a lot of pressure on them to justify that spending? As Tim said, it's like a quarter of their, it's 1/4 of revenues. Do you think they're going to have to justify it, or they can easily show the payment or the give back that they're getting as a result of all of these the investments they're making?
They had a double-digit growth quarter for search business, which is a $200 billion plus business. They are still growing double-digit despite all the competitive pressures from ChatGPT. So, and look, 1/3 of their business is cloud and YouTube.
Right.
And that's still growing north of 25%. So to my mind, they are showing ROI on all that AI spend. And if they have more AI infrastructure capacity, the cloud business would be growing even faster. So the proof is there. People care about profitability and free cash flow for a company of Alphabet size. And that's where, anytime they raise Capex, it will raise some eyebrows.
Mandeep, is it fair to say that they're not going to spend on Capex if they're not getting, they're not seeing the ROI, right? They're not going to do it. Or is there so much pressure in this race that they would keep spending?
I think Larry Page made this comment a couple of quarters back, if I remember correctly, that we will go bankrupt but not lose this LLM race. So they really are all in when it comes to building this AI infrastructure.
I want to update everyone on Tesla. Shares higher by about 1% in the after hours. The trailing 12-month energy storage deployments achieved their 12th consecutive quarterly record. The company does plan for new vehicles launch in 2025. That remains on track. Second quarter free cash flow, really, really low compared to estimates. 146 million. Estimates were for $760 million. In the first quarter of 2025, free cash flow was $664 million. The Cybercab is scheduled for volume production starting in 2026. Once again, shares of Tesla up by about 1%.
All right, folks, you are listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stenovic. Mandeep Singh is with us, Global Head of Technology Research at Bloomberg Intelligence. He's going to stay with us in studio. We do want to bring in to the conversation Brent Thill. He's Senior Technology Research Analyst at Jefferies. He's got a buy rating on Alphabet. He's got a hold rating on IBM, which also is out with their results. And we are seeing that stock, let me just bring it up real quickly on the Bloomberg, shares of IBM are down about 4.4%. So we're both seeing some movement there. And right now, Alphabet down 1.2%. Hey, Brent, good to have you here into the conversation with Tim, Mandeep, and myself. Your take on what we got from Alphabet.
Yeah, I mean, it was pretty in line. I don't think there was any big fireworks. You had a bigger CapEx number, was about $4.5 billion higher, which is a sign of investing in AI. They raised CapEx by $10 billion, which again, everyone knows it's going to AI. And so I think everyone likes that they're spending to keep pace, but obviously it's having a drag on the margin. So the margin last quarter was about 40%. They're at 38.3%. So a little bit of a drag on the margin on the downside. And then, just magnitude of upside, just, not a lot. And they don't give you a lot of color of what they're doing. So I think, look, this has been the worst sentiment of any name I cover in internet. Our investors are not bought in. Everyone's starting their search with ChatGPT and Perplexity first, but you still end up in Google. And so the big question is ultimately, where are they going to end up in this AI race? And many of the advertisers are talking about a transition with AI overview and what they're going through, that it's more expensive and they're getting a better impact from it, but it's still early. So overall cloud, did well. YouTube was 13% growth. It was 10 last quarter, so accelerated a bit off an easy comp. And so, yeah, I think it's just basic kind of quarter, nothing really exciting. The challenge right now is investors just don't believe. Any investor I talk to is like, I need to be underweight Google because I just don't believe they're going to make this transition.
Well, make the case for us. Make the case for us that you think they will make the transition.
Well, the case for the transition is that you need three things for AI. You need data, users, and capital. And they have more data and more users than anyone in the world. So I've always said this, I think this is like pulling up to a stoplight and you look right and it's like a tiny little car, and you might be in a car that you think is faster, and then the car on the right just takes off, and you're like, wow, I didn't realize that was underneath the hood. Or where did the muscle come from there? They have a lot more AI muscle under the hood than they're showing. They're terrible communicators. They're not good with investors. They don't give you guidance. They don't go on the road. They don't spend time with investors like Nvidia, like Microsoft, like the rest. And so investors are just like, look, they give me the earnings call 4 times a year, and that's about it. And then the filing, and that there's nothing in it, and then I'm left to guess. So every investor has to do their own work, and we're all doing our own work. Your day starts in ChatGPT and Perplexity. It's not, and it was starting in Google maybe a year ago. There's alternatives. So I think this is the same thing we're seeing with Adobe, with Salesforce, other names we cover in tech. Is a new crop of AI stories going to effectively not necessarily replace, but become the central spot where you start your search? And I don't think that that boogeyman's going to go away for a while. So, again, I think, stocks underperformed, it's done nothing. You look at the IGV, the software index, it's up 12%. Google's flat. You look at the other index, the SMH, the internet index, you're up 18% year to date. Google's flat. I mean, there's literally been way better ways to make money, whether it's DoorDash, when you look at what's going on in Meta. And we hear this from advertisers. Advertisers are obsessed with what Meta is doing in AI. And so again, I'm not super bearish on Google, but I think what we're seeing are the facts of the facts, which is it's really hard to change the narrative, and they're going to have to make a change in their own behavior and the numbers, and then the adoption rate. And so that, again, we're never going to rule them out. I think the stock's super cheap, so that's why I still have a buy in it. But I would say of all the large cap internet names, they have the most work to do.